Hi everyone, I'm Thomas Adosi, Head of Product at CF Benchmarks. Today, we're going to dive into the Q1 2025 reconstitution of some of the flagship CF Benchmarks portfolio indices, including the CF Large Cap and Broad Cap indices. Indices in this index series are rebalanced and reconstituted on a quarterly basis on the first business day of March, June, September, and December. Constituent selection and weighting takes place as defined in the respective index methodologies, and very importantly, the CF Digital Asset Index Family Multi-Asset Series ground rules, quite a mouthful, all of which are publicly available on the CF Benchmarks website. And of course, all indices discussed today are regulated on the UK BMR. Now, the Q1 reconstitution executed on the 3rd of March saw a continuation of the recent trend of altcoin resurgence and a partial reversal of the capitalization concentration theme that we observed during the large part of 2024. As a consequence, the indices discussed today have not seen any outgoing constituents and have either seen new incoming constituents or have not seen any change in constituents at all. Now, to start things off, let's look at the CF Institutional Digital Asset Index, or IDAX. During the March reconstitution, there were no ingoing or outgoing constituents, as currently only Bitcoin and Ethereum meet the constituent eligibility requirement, which is designed to include all assets within the 95th percentile of the CF investable universe that are recognized as being in conformance with prevailing capital markets regulations of major financial jurisdictions such as the US. Now, given that only Bitcoin and Ethereum currently have SEC-approved ETFs available for trading in the US, they are the only eligible constituents. Now, what does the CF investable universe actually mean? It is the universe of assets defined by CF benchmarks to satisfy specific requirements for exchange trading, for custody, liquidity, and also for asset turnover. Next, we have the UC5, the CF Ultra Cap 5 index. This index also had no change in its list of constituents during the March reconstitution. The constituent selection method for this index is to choose the top 5 assets by market capitalization. The index then operates a set of codified buffering rules for entering and exiting constituents based on market cap ranking. Now, let's look at some concrete examples. Current constituent ADA achieved a market capitalization rank of 6, with potential new constituent Doge ranking in 5th place. However, due to the buffering rules, no change was implemented during the March reconstitution, meaning that ADA didn't exit and Doge didn't enter the index. And that's because, as per the methodology, for a new constituent to enter the index with a market capitalization rank of 5, an existing constituent must have a market capitalization rank of 8 or lower. Now, given that ADA didn't fall below the 8th ranking, ADA remains as a constituent. Now, you might ask, why do we have buffering rules? Why bother? This type of buffering rule is designed to support index replicability by reducing the amount of trading and therefore churn during reconstitutions that replicators of the index might face. Next, we have the CF Large Cap Index, which is designed to cover 95% of market cap within the CF investable universe. The large cap saw 3 incoming constituents during the March reconstitution, XLM, SUI, and HBAR. These incoming assets passed the top 95th percentile constituent review screening buffers, which state that a new constituent cannot enter the index unless it passes the 94.5th percentile. For example, HBAR's market capitalization begins with 93.55%, which is smaller than the buffer, hence it enters the index. But to use a counterexample, Pepe did not pass this buffer, though it passes the initial 95th percentile with a market cap starting at 94.63%. Now, the buffering rules also state that existing constituents will only exit the index if their respective market capitalization begins with a percentile greater than the 95.5th percentile. To use an example, Near Protocol remains in the index despite having a market cap beginning with 95.22%, as this is below the buffer for an existing constituent to exit. Now, moving on to the last index, the CF Broadcap Index, which covers 99% of the investable universe. So the index gives a much broader representation of the overall crypto market capitalization. Now, in this case, there were 6 incoming constituents for the Broadcap during the March reconstitution. We have POL, AXS, SAND, Atom, ENS, and Gala. The index operates the same buffering logic. In this case, it's the 99.5th percentile for a constituent to exit, and it's the 98.5th percentile for a constituent to enter the index. Now, those 6 constituents all enter the index as their market capitalization begins with a percentile lower than 98.5%. Notably, during Q1, none of the current constituents had a market capitalization beginning with less than 99.5%. So all remain in the index with no buffer applied. Notably, however, potential new constituents such as Super, ZRO, Prime, and Stark all have market capitalization beginning with less than 99%, but are kept out by the new constituent buffer of 98.5%. Super is the highest ranked out of that batch, having a market capitalization beginning at 98.52%, but did not enter the index. The token of the Eigen protocol is a noteworthy case because, in spite of a market capitalization beginning at 95.5%, it was not added to the Broadcap index. And this was because Eigen failed to pass the minimum asset turnover requirement of 2%. Now, the purpose of asset turnover screening is to ensure that a sufficient percentage of total supply is readily available for trading to enable effective replication of the index whilst not exposing investors to undue liquidity risks. Now, that brings us to the end of the Q1 2025 Reconstitution Recap. Thank you for listening in, and please visit the CF Benchmarks website for further content like this.